Hello, and welcome to myfinanceteacher.org. In this video, I want to look at one of the silver miners that I actually own in my personal portfolio. From this small image over here from my portfolio, you can see that I have a number of shares of Pan American Silver, that's PAAS for the ticker, and I've been holding it since it was just over $20. Currently, market price is $24.5. If you want to get timely updates to get on some of these profitable trades that I'm trying to make in my personal portfolio, join us at myfinanceteacher.org. So a few days ago, I got a request on YouTube to look at some of the smaller silver miners. And over the next few weeks to a couple of months, I think some of these smaller silver miners might actually present some amazing opportunities. However, in my personal portfolio, I haven't had time to study some of these smaller miners because with a smaller miner, you really need to spend a little bit more time to see if you really like the company. So instead, in this video, I'm going to look at a relatively larger silver company, but it might still have some very interesting potential over the next several weeks to a couple of months. And as I said, I do hold it in my personal portfolio, although it's not a big percentage of my portfolio. So for this valuation, we're going to look at both gold and silver prices. We're going to look at the reserves that Pan American Silver has in the ground. Of course, it takes costs to extract those reserves. So we're going to look at production costs. Long-term debts, of course, should be subtracted from the company value. Then we want to estimate that value per share. So we're going to look at shares outstanding as well. And we'll take into account the value of time as well, as it takes time to extract those reserves out of the ground and get the value into your hands as an investor. And we'll also look at insider shares, as these are usually strong hands which might help to support share prices a little bit. In this evaluation, I'm going to look at three scenarios: balanced, conservative, and optimistic. For the balanced scenarios, I will look at gold and silver price, which are around 2% below the ongoing spot price. Current gold price is over $17.40, so the price I'm going to use in my balanced scenario is $17.07. For silver, the price of the balanced scenario is $16.6. Current silver price is above $17. The conservative gold price is $15.37, and conservative silver price is $14.94. Optimistic gold price is $18.78, and optimistic silver price is $18.26. Actually, the conservative prices are 10% below the balanced price, and optimistic prices are also only 10% above the balanced price, which means it's even much less than 10% above the current price. As you see, in general, we are leaning towards conservative valuation, as even an ongoing current price is above our balanced scenario. Moving on to the reserves and the resources of the company. For proven and probable reserves, it has 5.1 million ounces of gold and 557 million ounces of silver. They also have measured and indicated resources, which stand at 10.6 million ounces for gold and 797 million ounces for silver. Actually, for our conservative and balanced scenarios, we're going to ignore these resources completely, meaning that, again, we are leaning towards the conservative valuation when we're trying to avoid buying an overpriced asset, buying an overvalued stock. Only in our optimistic scenario, we are going to include only half of those measured and indicated resources in the valuation. As for the all-in sustaining costs, these are actually quite higher in the company's most recent first quarter reports for 2020. But the reason for much higher all-in sustaining costs is the shutdown that the company experienced due to recent health concerns. Of course, with the shutdown, the total production is much smaller, meaning that the company's costs are divided by a smaller amount of ounces produced, giving us much higher costs per ounce. So instead of looking at most recent all-in sustaining costs from 2020, I'm going to look at all-in sustaining costs by the end of 2019. And even here, from the annual report for 2019, all-in sustaining costs for silver is under $11, and I'm just going to plug in $11 to try to err on the conservative side. Looking at long-term debt, which we're going to subtract from our valuation, it stands at $275 million, and the company has 210 million shares outstanding, out of which 1.53% are held by insiders. As to the time value of money, the company's reserves in years is going to be used as the time that it will take to extract those reserves out of the ground, and those reserves in years are over 9 years for this company. And we're going to use discount rate of 2%. Relatively small discount rate, but remember we're discounting actual gold in the ground over here, not some future fiat cash flow. So a relatively modest discount rate of 2% is, I think, appropriate. Finally, let's have a look at our scenarios. A summary for the conservative scenario. I've just noticed I didn't put any information on silver here, but the conservative scenario, as well as other scenarios, do include into account the prices of silver and the proven and probable reserves of silver as well. So all of that, plus the information on silver, gives me an estimated share price of $21.4. That's actually quite considerably below the current market price of $24.5. So you might look at it as one of your risk levels as to what the company valuation might tend to if over the next several years gold price tends to fluctuate around, let's say, $1,500 to $1,550, and silver stays just around $15 on average. Why over the next several years? Well, that's because this sort of valuation generally works over a long-term investment, and it's not a good timing tool for shorter-term trades. So is it likely for silver to stay around $15 and for gold to stay around $1,500 over the next few years? That, of course, is questionable given all the trillions of dollars that are being printed right now. In either case, that's our conservative valuation. Next, moving on to the balanced scenario, the changes here are only in gold and silver prices. Again, we do include silver in the valuation. I don't want to spend time to add these details here right now. So the rest of the information is the same, and that gives us a valuation of $29.22, which already compares very favorably to the current market price of $24.05. And lastly, looking at the optimistic scenario, if over the next few years gold prices tend to stay around 1900, whether it's likely or not, that of course is questionable. And if silver prices over the next few years stay above $18 per ounce, that's also questionable. And if we include half of the measured and indicated resources that the company has into our valuation model as well, with the rest of the information staying the same, that actually would give us an estimated value of $64.96, which sounds terrific compared to the current market price of $24.50. So there you go, one of the silver miners that I actually own, in addition to GDX, SILJ, a number of selected miners and royalty companies. If you like this analysis, then make sure to hit that like button, subscribe to the channel if you haven't, and join us at myfinancesteacher.org. This is posted to the members on 18th of May. I've just noticed the typo in the date. But the general public on YouTube is going to see this video after a significant delay of probably a couple of weeks. And it's possible that the share price of Pan American Silver by then would be higher than the current market price. So for timely updates, join us at myfinancesteacher.org. And for now, I wish you a nice day and good luck in your trades.